My name is Jeremy Kasdan, Sales and Partnerships Lead at FinTech TV, and Taking Stock starts now.
Time to rock and roll on this Friday, May 29th. 2 minutes to go here into the closing bell. And once again, as is usually the tale of the tape these days, at least seemingly another round of all-time highs, at least for the Dow and the S&P 500. Welcome to today's edition of Taking Stock, Friday edition of the show, live from the trading floor of the New York Stock Exchange. I'm your host, JD Durkin. In just a few moments, the team from Dr. Reddy's, ticker symbol RDY, will ring the closing bell and bring about a close, not just to today's trading action, but quite a week it has been here on Wall Street as well. Here, despite the record highs, you only have two sectors in the S&P 500 in positive territory. This rally, once again, as has been the case, led by technology shares as well as financials. Your S&P 500 laggards, however, on this Friday, consumer staples, energy, and healthcare. Over in the Dow, IBM far and away the outperformer, shares up more than 10% on the day. Salesforce and Microsoft, a few other tech names with very strong tapes as well. Walmart, Johnson & Johnson, and Nike are your Dow 30 component laggards. Walmart down 14% in just the last week and a half, now trading all the way down to its 200-day moving average for the first time since April of last year. That was, of course, the Liberation Day lows. The magnificent tech stocks mostly lower on the day. Shares of Alphabet down almost 2%, but Microsoft, the outperformer, up 3.7%. Dr. Reddy's is here for the bell. The great Eris Cuscolo is on deck. He'll join us. But first, time for the close. That was you, right? That hype? Great. Eric Crisco is bringing the hype today, and rightfully so, for a new round of all-time highs. Your final tail of the tape on this Friday, May 29th. The S&P 500 up 0.2%. The Dow 30 up 0.7. The New York Stock Exchange Composite Index will finish in negative territory, 0.4%. It's right there. And the small caps down 0.6 as well. Semiconductor stocks mixed. Broadcom up about 3% a few days ahead, of their quarterly results. Memory stocks mixed. Quantum stocks down on the day. Let's bring in the man himself. He is a market strategist down here on the trading floor of the New York Stock Exchange, the one and only Eric Crisco. My man, happy Friday.
Happy Friday to you. It's great to be here, as always.
It felt like it was a short week because we had Monday off. At some points when we do this business, it feels like a very long week. I'm glad we made it. I'm grateful for your time.
Of course.
I'll let you start wherever you want. It wasn't a clean win across the board for the major market indexes, but a few all-time highs here.
Yeah, again and again and again, all-time highs. Just focusing on the S&P 500, right? It's just what this index has been doing constantly over and over and over again. Despite the fact that we have a war in Iran, despite the fact that we hit $100 in oil, it's actually coming off the boil a little bit. But yeah, this thing, it's just a freight train that keeps moving higher as of now.
What are you seeing on the oil majors, specifically West Texas and Brent? They're both down in the day. We're kind of seeing them trade right down at their support levels, at least since the start of the conflict. Obviously, there in early March, they moved a full leg higher, but they've been kind of a bit range bound. What have you seen on the technicals?
Yeah, I mean, recently they've pulled back a little bit. Let's focus on Brent crude, since that's the ICE product that we trade, so we love it. So Brent's come down from its highs. It's down kind of around $90 now, just a little above. That $90 level is a big support level. So we're going to watch that. Breaks down further from there. We have a few of the more longer range moving averages that can serve as support levels. But this market has consistently priced in some type of resolution to the Iran war, some type of reopening of the strait, and that's why oil has been, quote, contained. Even though it's an elevated level, it's been contained. You see the curve come steeply down. The futures curve comes steeply down, moving into December, January 2027. So the market is expecting prices to come in. That only happens if all this Iran stuff gets taken care of.
I need to get your take on Dell. Long thought maybe by many people to just be a tech laptop company. Do analysts now have to totally rethink Dell, its greatest day ever as a publicly traded company, up well more than 30% today, Eric.
Yeah, we talk a lot about stocks that are mooning. That stock absolutely mooned, up 30%. Speaking of up 30%, the EPS estimates for 2027 were adjusted 30% higher.
Wow.
So that kind of just tells you how the entire stock just kind of got re-rated. And now, yeah, it's not a just hardware name where you just buy your computer, right? I got to get a Dell, dude, right? That was a that was a commercial a long time ago,
throwback.
right? Yeah, exactly. Now it's fully ingrained in the AI trade. It is part of the AI narrative, and so that's why you saw that incredible move today.
We always say sell in May. I'm going to talk to our audience a little bit more about the sell in May trope or axiom here in just a little bit. Not a lot of these sectors sold off in May. Over the last month for the S&P, technology-led, healthcare, consumer discretionary. What does that tell you about the strength, maybe the durability of where the bull market is right now?
Yeah, so I mean, tech is obviously leading, right? We talked about Dell, but it's all the other stocks as well. The memory names, the semiconductor names, now even software, right? Left for dead a couple of weeks ago. The IGV ETF sector, software ETF, is back to about unchanged on the year. It was down almost 30% about 2 months ago. So you just saw that entire complex rip higher. But you can't sell in May and go away, I don't think, in this market, because what we see is a lot of idiosyncratic moves underneath the index surface, right? So, stocks are moving up 30%, but other stocks are getting hammered as well, and so, some of the kind of range bounds, tick higher in the index level is actually masking a lot of movement underneath the surface. So you got to pay attention to what's happening to individual stocks.
What most surprises you in this market? Because every time I come by your desk, and I do bother you a lot day to day down
not
here,
enough.
I always want to see what you're looking at on the technicals and on the charts. You're always cooking on something that I miss that the rest of us probably miss. Are there any big surprises when you see these charts and technicals day to day? Maybe some outperformers or surprising underperformers in this market?
Yeah, like one of the things, and maybe from my background, but healthcare has really, it was okay this month up in May, but it's really kind of had a difficult time catching a bid across the entire complex. It's been a relative laggard, not just for this year, but several years now. It's got great companies in it, but it hasn't had that narrative that people can latch onto. It's a difficult sector sometimes to wrap your hands around. So if healthcare starts to get going, that could be interesting. Maybe that happens if people kind of rotate out of tech. That's a name that maybe catches a bid a little later. I don't know if that's going to happen, but that's kind of something that we certainly will keep an eye out on. And then, just all the laggards that have underperformed, the next move higher might not just be tech taking us higher. It might be just a rotation out of tech and into all the other stuff that hasn't been working yet.
That's all the time I have, my man. I hope you'll come back and see us again soon. Eric Criscola, market strategist down here at the New York Stock Exchange. Have a good weekend.
Go Knicks!
Go Knicks, I love that. All right, as Eric and I were talking about, usually investors sell in May and go away. That is the old axiom here on Wall Street. It refers to investors selling stocks to avoid the historically sluggish summer months, but not this year. For the month of May, the S&P up 6.5%, the Dow up 4%, the NASDAQ up 9.5%. 18 different Dow stocks finished higher this month. Tech doing a lot of the heavy lifting, to be fair. Cisco, Apple, IBM, the best Dow outperformers. Caterpillar, Honeywell, both up 9. UNH, Merck, and Goldman, a few healthcare names Eric and I were chatting about, beating the S&P as well. While in the Mag 7, every name except for Meta this last month finished higher, led by Apple shares, up 16% for the month of May. Software did its thing. Datadog, Snowflake, both up more than 60%. AMD, Intel, and Marvell leading the ongoing semiconductor rally. Monday, June 1st, kicks off the final month of Q2 of 2026. Can't believe it. Todd, we'll take a look at one stock that calls the New York Stock Exchange home. Not a typo on your screens. That is Dell Technologies, up 32% on the day after reporting beats on top and bottom line by the widest margin in its history as a publicly traded company. That goes back all the way to 1988. Dell lifting its full year guidance on a bullish forecast for AI demand. Also the recipient of that $9.7 billion Pentagon contract. Shares of Dell are up, and this is true, 225% year to date. Yesterday, the New York Stock Exchange's very own Ashley Mastronardi sat down with Stuart Alderati. He is the CLO at Ripple, also president of the National Cryptocurrency Association. They discussed their new report on U.S. crypto holders. Take a look.
Joining me now is Stu Alderodi, Ripple's Chief Legal Officer and President of the National Cryptocurrency Association. Stu, welcome.
Happy to be here.
And I understand you and the team at the National Cryptocurrency Association just released a report on crypto holders. What are the biggest takeaways?
Well, we partnered for the second year in a row with the Harris Poll survey. We reached out to 40,000 Americans, which statistically for a survey is an enormous number. And we found that 67 million Americans today own or use crypto. So crypto is no longer a niche product. I think it is creeping more into the mainstream. It's not an either or. It's not where you either use crypto or use traditional financial services. I think we are now in a world where we're using both, and both are becoming interchangeable and interoperable. And that's what we're starting to see.
And I understand that your report also says that in a single year, 12 million more Americans became crypto holders. Where do you think the increased demand is coming from?
Right. So if you look at the results from the 2025 State of Crypto Holder Report compared to the 2026 State of Crypto Holder Report that we just released, you're right. We see that 12 million more Americans have entered the crypto economy. And that growth is coming from women. It's coming from construction workers. It's coming from manufacturing employees. It is no longer sort of a niche Silicon Valley financial technology, tech bro, crypto bro technology. It's really coming into mainstream America. If you go onto our website, the NCAA's website, we have a map, an interactive map, and you can actually scroll over that map and you can see by state where these crypto holders are living. And you can even go down to the district level, the congressional district level, and see where they are living. And we see that they are spread all across the United States.
And we've really seen an intersection between mainstream finance and crypto, especially in the past few years. Do you think these different groups are getting exposure from mainstream finance that are adopting crypto and therefore being more interested in it?
Yeah, I think that's exactly right. Again, you know, if you think about the smartphone, the supercomputer that we all carry around in our pockets, there was no one moment where we woke up and we said, okay, everybody's going to trade out their flip phones for smartphones. It sort of happened incrementally. It happened in a way where the technology just creeped into our lives because the technology was making our life better. And I think that's what we're now seeing with crypto. The vast majority of crypto holders say that they view crypto as a reliable and proven technology, established and mature. And with traditional finance now starting to lean into crypto and making crypto available through traditional financial apps, that's where we're seeing the two merge. So again, this is not an either or. I'm not either going to be all in crypto or all in on traditional financial services. I'm going to use both interchangeably. I'm going to be able to show up at the Walmart checkout registry and use my OnePay app. And I can set that OnePay app to say, do I want to pay in cash? Do I want to pay using my debit card? Do I want to pay using my credit card? Or do I want to pay using my crypto wallet? And that transaction will be sort of all happening behind the scenes. You won't have to make some big announcement that, hey, I'm paying with crypto. It'll just simply become seamless like I tap with Apple Pay. That's what we're seeing.
Thank you, Stu Alderodi, Ripple's Chief Legal Officer and President of the National Cryptocurrency Association. Thanks for joining us, Stu.
Thanks for having me.
Welcome back to the show. You are watching this Friday edition of Taking Stock, the best one we do all week. Join us now, Rick Haro, sports business analyst at FinTech TV, longtime friend of ours here on the broadcast. Rick, nice to see you. We got to start with Arsenal because my producer Jeremy would be very upset if I did not start the conversation with Arsenal, ending a 22-year wait for the Premier League title. How big is this commercially? What does this actually unlock for the club?
Who's Arsenal? Just kidding, Jeremy. Come on, man. Look, they're worth about $5 billion, so that is very clear. They win their first title since the 2003-04 Invincibles, which was, the name of that unbelievable deal team, fourth in the EPL today. Revenues about $888 million, about $351 million in broadcasting, $339 in commerce, and nearly $200 million in tickets. So listen, they are very important. But how about Stan Kroenke? He's the biggest owner of sports franchises in the universe, maybe even larger. $23 billion in his portfolio. The Nuggets, the Rams, the Avalanche, the Rapids, the Mammoth, Arsenal. But he also owns SoFi Stadium. He owns Ball Arena, where the basketball and hockey team play. And he owns the facility and is involved with the one with Arsenal. So the guy knows what he's doing. He also owns Skycam, in case you want to overdo it. So congratulations to Stan. Congratulations to Arsenal. And I guess, congratulations to Jeremy.
Arsenal's taking on PSG Champions League final this Saturday. I believe it's scheduled for 12 o'clock East Coast time anyway. If they win, what would it mean for the club's business?
Well, it'll go through the roof. And frankly, let's remember that it is one of the top brands in the Premier League no matter what. It's London-based. They've got a kick-ass stadium. It's an incredible deal today, but let's remember they've been in a 22-year slump. And if you do win, all of a sudden the commercial implications become significant. 20, 30% increase in revenue. You don't want to predict those kind of things, but if they do, if it's a stock, I buy it.
Rick, I don't know if you've heard, here in New York, we're a little focused on a basketball team called the New York Knicks. They swept the Cavs, heading to the NBA Finals for the first time in many years. What does this mean for Madison Square Garden? What does this mean for Jimmy Dolan? And what does this mean for New York?
So I don't know if your initials, are you anywhere near the Dolan relative, Dolan family? This is a time for you to suck up to Jimmy Dolan if you want to, by the way. Party like it's 1999. Yeah, well, all right, you can try something else. What it means to the Garden is that the seats of $279,804 for 2 floor seats that a New Yorker bought and advertised for the Cavalier series, that is going to be dwarfed by whatever happens with Game 7 tomorrow night on the western side. You got 2 incredible storylines. You've got a Wemby, San Antonio, Oklahoma City deal on one side, and then you got the Knicks at $2 billion, $7.5 billion, number 2 in the NBA with nearly $600 million in revenue, and it's about time they play pretty well. It's good for the NBA. The average franchise value for the NBA deal now is about $5 billion. Remember, they're bidding Seattle and Vegas up not against each other. Those 2 will be expansion franchises. It'll drive the value up everywhere. NFL up about $6.5 billion average. NHL about $2 billion average. NBA far and away the biggest mover. Again, if the NBA were a stock, I'd buy them too.
Rick, who do you like to win it all?
Oklahoma City. I can't be in New York. I'm sorry, man, but look. Does it matter?
That's it. We're done with this interview.
Yeah, what
Rick
the hell does it matter to me?
In this part,
Thank you.
Deeply matters.
Bye.
Yeah, that's fair enough. Go New York. Rick Caro, our good buddy there, sports business analyst at FinTech TV. Have a great weekend, folks. Don't go anywhere. A lot more Taking Stock coming up right after this. Welcome back to the show. Dan Rogers joins us now, the CEO at Asana, one of the world's most recognized work management platforms anywhere in the game. Dan, nice to see you here. Happy Friday. Very strong quarter, my friend. 11% after earnings, revenue beat, margin expansion. What's driving that momentum?
You know, if you look at the future of work, we see a world where humans and agents are going to be working together. Like if you just close your eyes and imagine how work is going to be in a couple of years' time, we are going to have agents that are augmenting and operating alongside us. And Asana is the operating system for human agent teams. You know, we've been at this for 18 years doing collaboration. Our collaboration was originally human-to-human collaboration, but the same fundamentals apply when it comes to agents and agents operating within the context of an organization. So that's where the uplift comes from.
You've warned about what you call the great AI gap. Is artificial intelligence actually making workers more productive yet?
Yeah, well, you saw studies from Goldman Sachs and McKinsey where they're showing that a lot of that personal productivity gain that we're all seeing, and boy, have we had a personal productivity gain, hasn't really translated into the enterprise context yet. In many examples, companies say, my productivity has gone up 1 or 2 or 3% from AI. That's not really what we've been promised, which is what we're calling the AI gap. So the AI layer is not sufficient. You need the operating layer on top of that. You need a place where humans and agents can collaborate inside real enterprise workflows. It's those business critical workflows that actually matter. Think about it. Order processing or sales management or quality control. Yes, personal productivity is helpful, but what you really need is things that cut across the systems, things that automate all of those manual processes. That's where the real productivity uplift comes from.
What do you see as being the biggest mistake companies are still making using artificial intelligence right now?
Look, I think it's early innings, right? And it's great that we're all producing more documents and that we are producing more stuff because of AI. But that's not sufficient to actually improving your workflows. It's where you bring humans and agents together inside that workflow. And when you automate much of that criticality, that's when you see the real productivity uplift. So you saw some of the progress that we talked about on our earnings on AI Studio. AI Studio is our product that provides many of those automations, automating things like intake processes, automating things like routing, quality control, translation. That's where you see real work start to get done by the AI agents plus the operating layer or the operating system on top of that. And then you saw in the news, we acquired Stack AI. Stack AI takes that one step further, which is taking all of those automations and expanding them to third-party systems. If you think about a given company, it is a combination of lots of third-party systems, databases, CRM systems, order management systems. Creating all of the automations between those systems is where we think the real unlock of AI comes from.
The Stack AI deal, $75 million. I got about 30 seconds left. How much of Asana's future is really an AI story?
I mean, really, we see ourselves as the platform for human agent collaboration. So not only are we an AI company, we're an AI infrastructure company. We're the operating layer that sits on top of those foundational models that brings real productivity to the enterprise.
Dan Rogers, CEO of Asana. Nice to see you. Enjoy your weekend. Don't go anywhere. Those of you watching at home, we got a lot more Taking Stock coming up live from the big board right after this. Let's do it. Welcome back to the show. Time now for the latest headlines and startups, raises, and rounds. First, AI insurance startup Corgi set to raise $106 million at a $2.6 billion valuation, doubling in value from just 3 weeks ago. Next up, Visa set to invest an undisclosed amount in AI coding platform Replit as the two companies explore a future where AI agents can make purchases and accept payments on behalf of users. And finally, for your weekend, Princeton spinout Thea Energy raising $100 million to develop its next generation nuclear fusion technology as it races to deliver commercial clean energy. And now Scarlett Sieber, the one and only from Money 2020, is back. Complicated wonky finance terminology into day-to-day language anyone can understand. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is Jargon Translator. Today's term is risk retention. Risk retention answers a deceptively simple question: who takes the loss if something goes wrong? When a lender retains risk, it keeps exposure to defaults. When it doesn't, risk gets sold, securitized, or transferred downstream. This matters because incentives follow exposure. If you keep the risk, you care deeply about underwriting quality. If you offload it immediately, growth can outrun discipline. After the financial crisis, regulators made this explicit, requiring lenders and securitizers to keep skin in the game. In fintech, risk retention quietly separates platforms from balance sheet businesses, software companies from lenders, and sustainable growth from fragile scaling. You often don't see the effects of poor risk retention until years later, when defaults rise and capital pulls back. Risk retention doesn't show up in marketing, it shows up in survival. And with that, that is your jargon translated. If there's another underwriting term you want broken down, drop it below. It just might make the cut. And in the meantime, back over to you.
What a week it has been down here on the trading floor of the New York Stock Exchange, and we turn our attention to next week here on Wall Street. Quarterly results from Palo Alto Networks, Ulta Beauty, and Dollar General on Tuesday. Macy's, Broadcom, CrowdStrike all set to report results on Wednesday. Next Thursday, the latest numbers from Planet Labs, Lululemon, as well as Rubrik. Plus on Wednesday, the ADP jobs print, and this time next week, on next Friday, the May jobs report from the Bureau of Labor Statistics. Final tail of the tape, the S&P 500 all-time high, the Dow Jones Industrial Average all-time high. Thank you for watching today and this week's edition of Taking Stock. Enjoy your weekend. We'll see you again on Monday.